Hi, we are Group 1 and we'll be discussing a Florida bookkeeper's $9.8 million embezzlement scheme. The sole perpetrator is Hava Yafra Austin. She is a bookkeeper and owner of Accounting Solutions Today, PA, out of Miami or Broward County, Florida. She was contracted by a private company to perform such bookkeeping functions. She was employed starting in 2001, but the fraud occurred from 2008 through 2024. Here, she carried out unauthorized wire transfers from the private victim company to Accounting Solutions Today. She concealed this fraud by committing falsified ledger entries with similar but false vendor names. And once this was discovered, she was sentenced to 51 months in jail after stealing $9.8 million.
Austin's fraud is classified as a false accounting entry embezzlement scheme. This is when those entrusted debit the general ledger and credit their own account. Austin was entrusted to the bank accounts of the victim company, and she ultimately wired the funds from the victim company to Accounting Solutions. The red flags associated with this are that she was both the bookkeeper and she had signing authority. And the second red flag is that the journal entries involved used fake vendor names that were similar to real vendors that they used.
The fraud was ultimately discovered when one of the victim company owners discovered many of the illegitimate transactions during an accounting review. In smaller companies, this shows that it's important for the owner to take a more hands-on approach towards reviewing accounting when segregation of duties is not always possible. Looking at the fraud triangle, the pressure in this case was Austin's gambling addiction and the need to fund it. A lot of the stolen money was then wagered through local or online casinos. The opportunity for the fraud presented itself through poor controls and segregation of duties, such as lack of research or completion of bank reconciliations, and the separation of record keeping and the payment authorization. Austin likely rationalized by disassociating with the impact of the victim company and the need to maintain her lifestyle.
So the relevant accounting issues and guidance would be ASC 250, which is over error correction, and the particular paragraph that we chose was ASC 250-10-45-23. And what this talks about is that any error in the financial statement of a prior period has to be reported as an error correction. And the restatement process has a couple of things that need to be done. The first being that the cumulative effect of the error on the prior period has to be reflected in the carrying amounts of the assets and liabilities that were stated as a result of the error from the beginning of the first period that it was presented. Any adjustment has to be done to retained earnings for that period if it was applicable. And then financial statements for each individual prior period presented need to be adjusted to reflect the correction for the specific period of the error. So given how Austin went about committing this fraud, we would expect most of the fraudulent and error corrections to be within the liabilities and expenses, since she was transferring money using fake vendors, and she was adjusting real transactions or just creating additional false transactions. And the net income of the victim companies would not need to be restated, as net income is not affected by error corrections, as this is explicitly stated within the codification.
All right, thank you, Andre. Now we can talk about the necessary controls and recommendations that we have for the victim company. So we kind of assumed the victim company was a smaller company, so we thought some of the most effective controls would be the dual authorization of payments, independent bank reconciliations, and then vendor management controls. So dual authorizations, this would require another signature from another person, which would prevent just one person, like Austin in this case, from having total control over the company funds. And then the monthly reconciliations, this would be performed by someone other than Austin and would just provide another review of the cash activity. And hopefully someone would have noticed that there were transactions that were not legitimate. And then finally, the company should have implemented better vendor management controls. So having restricted the ability to create or modify vendors. Austin was the one who was creating and modifying vendors, so just having management oversight, and then also maybe requiring a additional reviewer for new vendors could have prevented this fraud. So then finally we just have our sources. Thank you.